So let's go ahead and take a look at a couple examples of how it looks comparing distribution versus accumulation in a stocks weekly chart. So what we've got here up on the screen is PayPal's weekly chart. So let's go ahead and take a look at how we analyzed base number one, which I have labeled here, 2 weeks of distribution versus 3 weeks of accumulation. Let's go ahead and count all of our weeks of distribution first, and the way we're going to do that is we're going to analyze our first base, which is this one down at the bottom here, base one as I have it labeled, and we're going to look at all of the down weeks that appeared on above average volume. So remember, we're coming stocks on an uptrend, we're making highs, eventually we reverse off the high, close at lows. However, volume is not above average here, so we go to week two. Looks like we get a little gap down here, close clearly in the lower half of the range as volume picks up to well above average. This is clearly a distributive week here, so here's our first week of distribution. Let's go to our second down week on well above average volume, which is this one. You'll see I've got it labeled A here. Why A stands for accumulation, even though we've got a pink week. Remember, it's going to be very important to understand, exactly how to count what accumulation and distribution looks like, even at its most subtle points. So this might be one of those, if you're a little newer to comparing, weeks or days in a base day by day or week by week, just using pure price and volume. So because we shake out down below the stock's major moving averages, since we've got a weekly chart here, what we're looking at is a 10-week average, which is the equivalent of the stock's 50-day, and this red line is the 40-week, which is the equivalent of a stock's 200-day moving average. In any event, we shake out all the way down to the lows, but finish almost all the way back at the stock's highs. We still finish down from the week before, but this is, a hammer candle. If we were looking at candlesticks, where this is your hammer's handle and this is the head of the hammer here, this is a clear week of accumulation, even though it's a pink or a down week per se. So this is going into the accumulation count, which we're going to get to. So now we're moving on to our third down week, which again here we can see is a sharp drop in price, accompanied by bigger volume, big pickup in volume, again way above average. So now, as you can see, there are no more these are the only 3 weeks of above average down volume. BO stands for breakout here, so the rest are either below or at average. You'll see this is a tad above average, but this isn't enough to bother counting. So that's how we get 2 weeks of distribution on this first base. We've got a first clear week here. This one is actually subtle accumulation when you take a deeper look at it, and so week number 2 of distribution is going to be this third down week. So now let's go ahead and count accumulation. So accumulation week number 1 is here, just barely in the upper half of the range. However, it's there. Volume declined, however, it's still well above average volume, so that counts as a week of accumulation on above average volume here. It does not have to be bigger. We're not counting accumulation versus distribution the way we would on a daily chart. We're strictly looking at all of the weeks on above average volume, and then we're going to analyze where the price is relative to that. The pickup doesn't matter. This is all considered big volume in that regard. So our first week is here, well above average volume, closing the upper half of the price range. So there's week 1 of accumulation. Here's our second week of above average volume on an up week, and again we're well in the upper half of this stock's range for the week. We close a good bit higher, so here's week number 2 of accumulation, and here was our subtle week. Remember, we're going to go back and count. This is actually even though it's a red week. So there's week number 1, week number 2, week number 3 of accumulation, and then you'll see a big, we can point out the one here that's just a smidge above, if you want to call it that, was another week of accumulation, and then the breakout happens on a huge pickup in volume here. So this is there's clearly more accumulation in this space than distribution, and so not surprising we've got a run here before we ultimately back up from a high and begin to build a new base here. So let's go ahead and analyze base number 2. Here's our first week down in this base, and remember this counts as a base. Here's week number 1, 2, 3, 4, 5, 6, 7. Remember, there's got to be a minimum of 7 weeks in a base unless it's a flat base, which can be a minimum of 5 weeks. Week number 8 breaks out and fails. So this is the breakout week, but it's also week number 1 of what our new potential count. Maybe we only go sideways 3 weeks and break out again, which would be more of an add-on entry. It's not going to be a new base breakout. So we'll see how that all shapes up as we move along here. In any event, let's go back to week number 1. Our first week down comes on above average volume. So again, we'll start, here's our first week of distribution. We're not going to look at this week because it's below average. Here's our second week on above average down volume. Again, this is a clear week of distribution. We closed down much closer to lows than highs and clearly in the lower half of its range. Then this will get to this. Not only is this is actually the beginning, the breakout and beginning of its new base. So this counts for the base that is potentially forming. So here we've got our 2 weeks of distribution and our 2 weeks of accumulation. We can see here's our 2 up weeks, and you can see here that's another what you'd call a hammer on above average volume, clear accumulation, and here again well above average volume, and you're well into the upper half of the range on this day, or week rather. So that's where we got 2 weeks versus 2 weeks. So what you want to see it at least be, you want to see more accumulation versus distribution. It's not that it couldn't work if it's even. Remember, everything is weight of evidence. So depending on the stock you're looking at, how late it is in its move, what the group looks like, what the rest of the stocks in its group looks like, yada yada yada. So in this particular case, we've got the two weeks versus 2 weeks. It's even. What do you do with that? I mean, in this case, it failed. However, if weight of evidence, if everything else was absolutely glowing on this stock, and the only thing that I had working against me was we had an even count here. Well, the failed breakout would tell me if I had bought any on that breakout, I don't think I'd be sitting with my full position, if any of it. Again, depending if I already owned some prior. But even if not, as we're, I said this is a current chart. We're looking at late in October 2020. We've got an election around the corner. So given that the case, the wild volatility, all of the uncertainty, earnings in the mix, we're in the thick of earnings season now. Given the even count, I'd probably back away had I bought any, and had I not bought any, I would just stick with a stocks chart that was showing a much more clear signs of accumulation than this one. There's tons of stocks out there, so if I've got one that's showing me clearly 2 and 3 weeks of accumulation versus distribution, I'm always going to go with that over one that's showing, an even count here. Although as time goes on, this may shape up and be absolutely fine here. So now that we've gone through one example slowly and in detail, we're going to go through another one here that has a little bit more to it. However, we're going to move a little bit more quickly now that we have an idea of how the process works. So again, like we did on our last example, we're going to start by counting all of the weeks that ended on above volume to the downside. So all of the big above average volume down weeks. So here is week number 1 of above average volume to the downside, which is also first week down, which begins the new base. This price action here is clearly negative. Close lower end of the range near its lows for the week,
volume clearly above average. We scoot along here to our second week of above average volume on a down week. We've got again here clearly bearish price action. So that gives us 2 weeks of distribution here. Moving on to our next week of above average volume on a down week, which is our third and fourth weeks here. However, if we go up to the corresponding price, we can see both of these weeks are actually bullish price action, where we close well into the upper half of the range. This week closed near highs. This one's clearly in the upper half. Volumes above average, which is why we have these marked with A for accumulation. And likewise, while we're at it, let's go ahead and look at D. This is above average volume up week. We're making an exception here while we're looking at the exceptions. The corresponding price in this case is clearly negative. Looked like we were trying to break through some near-term resistance, but ultimately fell back below its 10-week line, closed near its lows for the week. Not only did volume finish above average, but it picked up from the week before, so that's another week of distribution, even though we finished slightly higher on that particular week again, which is right here. So let's continue on. Here are our next 2 weeks of big volume on down weeks. These are both clearly negative weeks of price action here. As we move along, here's our next week. Again, clearly negative price action, another week of distribution. And our final week is right here, which corresponds with this week. Closes in the lower half and below its 10-week, although again, you could mark that as soft distribution. It's probably close to 40% off its lows there, but for the cases, for this example, it has closed in the lower half and below its 10-week line, which is significant, so we're leaving that as distribution. That is how we get 7 weeks of distribution in our first base. 1, 2, moving along. These don't count, they're accumulation, but number 3 here is this black line. Then 4, 5, 6, and 7. Those are our 7 weeks of distribution marked by those red arrows and this one black arrow, which goes to the red D for distribution. Now let's go ahead and do the same thing for our up weeks and see how we came up with our accumulation, which is starting here is our first week on above average volume. Let's do a couple at a time. Let's look at this one. So this week here clearly corresponds to positive price action, and this without a doubt is a huge outside week. Massive volume, closes near the highs for the week. Moving along to week number 3 of above average volume to the upside, we've got another big rally, closed well into the upper half of its range. Same thing again here, another big rally on above average volume, clearly positive or bullish price action here. Here we've got another week, again, positive price action, starting to get that tightening up. We've got actually 4, almost 5 weeks tight here before we get a light volume shakeout and more sideways action. So back to our up weeks on above average volume. Our next week of above average volume that we're going to take a look at is right here, which corresponds to clearly positive price action. Our above average volume here corresponds to, as we've discussed prior, negative price action, hence its distribution. Let's go ahead and move on to the last couple. Here's the second to last week of above average volume on the upside. Another big outside week, and we actually have got a 34.19 close, which is above this 34.14 prior high, which is why I've got a new line starting here. Technically, that's going to be this down week would start a new base count in here. Regardless, the overall base count comes out that whether we count it as one large consolidation or combine the two, you can, if you go back and look at it, it all comes out the same. So that being said, we've got our final week of big volume to the upside here. This winds up being, well, this is a weekly chart. However, if it was a daily, this looks like it would be a pocket pivot. And then we've got our big breakout week here. So this is the first week that we actually go out and close solidly above the prior highs. So that's how we got our 7 weeks of distribution and 10 weeks of accumulation. Let's go ahead now and take a quick look at our second base, which is this consolidation right here, which I've got marked with these arrows. This one is a little bit shorter, starting again with our first week of above average volume on the downside is right here. We've got a new high, ultimately stalls, closes near the lows of its range on above average volume. That is a clear week of distribution. Our next week is the very following week. Here you'll see we've got a yellow arrow. As I mentioned on one of the weeks in base number 1, this I count as a soft week. We're going to count as a soft week. The other one could have been labeled with the yellow arrow back in this base, but in any event, we've got to close. If I looked, and we're about 44% off the lows here, even though we are below the 10-week line. We're still going to look at that as distribution with a yellow flag instead of a red flag. Let's call it that. So moving on to our third week we were going to look at of above average volume on a down week is right here. And you can see I've got this marked with an A for accumulation. And the reason for that is, let's go ahead and highlight that week. Here is the corresponding price action is right here. We shook out down to just about the stock's 40-week line, bounce and close well into the upper half of its range. That is accumulation, not distribution, even though the week finished lower. Moving on to our final week of above average volume to the downside, we've got another yellow arrow. Reason being, we shake out below the stock's 40-week line, bounce and close about 40% off its lows. So we're going to count that as another. Regardless, it's distribution. It's just it's soft distribution. As we said, we've given it a yellow flag instead of a red flag. So that is how we get our 4 weeks of distribution. 2 soft. 1 here, 2 here, and then our 2 yellow weeks make up 3 and 4. Let's go ahead and look at the above average volume weeks to the upside now and see how many weeks of accumulation we find here, starting with our first week here, which clearly corresponds to a week of positive price action. We rally and close clearly in the upper half of the stock's range. We're going to go to our black A here, which corresponds to a pink week or the red arrow, but because of its positive price action here where we find support just above the stock's 40-week line and bounce, close in the upper half of the range, that is a week of accumulation, not distribution. Our final week of accumulation is here. Second week that's on clearly above average volume. So we've got week number 1, week number 2 because of the price action, and our third week of accumulation is right here, another solid week of positive price action right there. Big rally, closed near highs, and eventually we make it through our 10-week line and take off again. So that is how we came up with our 3 weeks of accumulation in base number 2, and how the reason I've got it labeled 4 weeks of distribution, 2 soft, as we discussed, the yellow arrows, versus 3 weeks of accumulation. These counts obviously do not count the breakout. The breakout week, if we were to include that, would raise the accumulation count in each base by 1. So then we'd have 7 weeks of distribution versus 11 weeks of accumulation base 1. Then we'd have 4 versus 4 in base 2, 2 of those weeks of distribution being soft. I've heard Bill in many times discuss weeks where you get a solid close well off the lows of 40% or more. I count them as soft distribution. He would even go so far as to say that they would count as what I count above the midline. Let's say a soft week of accumulation. In any event, it doesn't matter. It's worth understanding how to read price and volume exactly. So when you're interpreting these and you've got a yellow arrow, you can kind of bring it into the mix and really give it a fair comparison, so to speak.